Hello, everybody. Thanks for joining us at this Cloud Elements webinar today. We're going to get started in a couple of minutes after the top of the hour, just to give everybody an opportunity to join. So hang tight, and we'll get started in a second. Hey folks that have just joined us, I'm going to wait another minute before we get started, just to allow some others to filter in since we're starting just the top of the hour. So hang tight, and we'll be with you soon. Okay, welcome everybody to this Cloud Elements webinar on the state of open banking. Thanks for joining us this morning, this afternoon, this evening, wherever you are in the world. Just before we get started with the actual content, per usual, a few housekeeping items to keep us on track. We will be sharing with you all of the slides that we show today and a recording of this webinar after the fact. If you have questions for us today, please use the GoToWebinar console that you see on your screen. There is a question section. Enter your questions in there. We'll try and take some questions at the end and maybe throughout if appropriate. And of course, we always love to continue the conversation. So reach out to us on Twitter, LinkedIn. The contact details for Cloud Elements, myself, and my co-presenter today, Richard Pulliam, are on the screen right now. With that, we'll get stuck into the content and start with introductions. My name is Ross Garrett. I lead the product organization here at Cloud Elements, and with me today is a longtime friend and former colleague, Richard Pulliam. Say hello, Richard.
Hello, everybody. Hi, Ross.
Hey, it's great to have Rich on the line with us today. Maybe you can tell us a little bit about your role, your background, and have the audience get to know you.
Sure. So happy Halloween, everybody. I hope everyone's out there either getting ready for their candied up kids or not. That's mostly my life at the moment. So yeah, I mean, Ross and I have worked in the past in the API space for, gosh, I don't know, Ross, I'm aging myself, probably 10 years or so.
Easily 10 years, yeah.
Yeah, so been around the API space for a long time. So working with Mastery, Alcatel-Lucent, Apogee, Layer 7, coming mostly from the developer side on the API management side of the market. Worked with financial services companies over the years on their API programs and strategies, and currently doing consulting and advice and advisorship on a variety of startups in fintech and outside as well.
Excellent. Thank you, Rich. I'm glad to have you today. So today's content is really focused around the state of the market in many regards, thinking about open banking in the context of some regulatory requirements, but also, what's happening in terms of business opportunity. So depending on where you are in the world today, open banking may in fact be a regulatory mandate. You're obliged, maybe in the EU through the PSD2 regulation, to open up services for payment initiation and account information. The same is starting to hold true in other markets, Australia, India, South America. But that's not true of everywhere. And I think regardless, the point that we'd like to focus on today is that even where there may not be a mandate, there is still absolutely an opportunity. When I was giving a presentation similar to this in Sibos this year, I was a little startled to see the statistic that, in mid-August, this is just a couple of months ago, really, less than 75% of the financial services institutions or banks that are subject to the EU PSD2 regulation are actually compliant. Now, I'm hoping in the 2 months since I gathered this statistic that everybody's kind of gotten up to the same page. But even where there is a mandate, not everybody is there. And so where there is not a mandate, I think this is a conversation just to sort of encourage people that it's worth pursuing an API strategy, an open API strategy, and looking forward to the future of banking. And there's ultimately a risk, right, for not participating in the end. One of the other key stats that I've been using recently, and this is really one of those shock and awe perspectives. According to Gartner, 4 out of 5 financial services organizations will either go out of business or be rendered irrelevant by 2030. This is very soon, right? 10 years. I think it's perhaps a little ambitious of Gartner to say that this number of organizations will in fact go completely out of business, but it does represent the fact that as the market changes, as we're having to engage with an ever-increasing number of partners, as regulations change, as consumer and business expectations change, so will your business need to in order to survive. And that's really what this whole session today is all about. But I thought, especially with Rich on the line, it's useful to maybe take some lessons from those that have gone before. Because even though this is a relatively new world order for banking and financial services, the notion of open APIs is certainly not an entirely new thing. In fact, there is a broad, massive ecosystem of applications and APIs out there today powering modern business. And Rich talked about his past experiences in the API management space. And really, that wave of trying to enable new digital products, new employee mobility, new types of experiences, leveraging the power of back-end systems in new ways through APIs is something that's been going on across the world in every industry for some time now. And I thought it's useful maybe just to pick at 1 or 2 specific areas Telecoms is a good one, near and dear to both Rich and I's heart, right? That there's the first wave of telco opening up their APIs is in many ways very similar to what's happening to banking today. They're looking at ways to engage customers in new and interesting ways. Perhaps this was a little protectionist in some regard, and the market changed around the network operators very quickly. I don't know what your thoughts here are, Richard.
Sure. Look, Ross, I think that's right. I mean, the more time I've spent in financial services on this motion toward open banking, it just reminds me a lot of the network as a platform concepts in the telco space from 2010, 2011, where it's very similar. You have highly regulated industries, massive scale, 5 nines compliance requirements, huge infrastructure, and the running joke in the telco business was always, it takes 2 years from idea to market with anything, with any application or any service idea. And so certainly what we saw in that market was a requirement that these gigantic competitors are so slow to move that they were disrupted by people that went in and sat on top of the infrastructure that was already there and focused on sort of the next wave of quote unquote users, which are developers. And that was, Twilio is a wonderful example of that. And it reminds me very much of a lot of the fintech API middleware platforms we see in open banking today, which is the banks are if they're too slow to move, it will beg for disruptors, people that will come sit in the middle and enable new applications to be built on top of legacy infrastructure, because they're not weighed down by both the development organization themselves and sort of the hierarchical nature of getting things out the door, right?
Yeah, absolutely. And you know, as you say, it's the history in these verticals is perhaps what weighs people down the most, right? Organizational change is as difficult as technological change, and you know, trying to serve the market in new ways is ultimately hard to wrap our heads around. But I guess my key point here for those listening is that you know, you're not alone. This isn't suddenly a unique thing that banking is having to deal with. That many industries have done so already, or are also concurrently solving these same challenges. And so yeah, there's a lot of areas for us to learn from, and hopefully not repeat the mistakes of the past.
Yeah, and Ross, I mean, I think it's your previous slide on the 4 out of 5 companies, you know, sort of suffering a future death in the next 10 years or so. I mean, it's an outlandish statement, but I think it also certainly holds true depending on how you look at the market, right? And I think you and I have seen it. Look at Nokia. Nokia is a wonderful example. Nokia, this is a great company that evolved from boots and rubber tires to feature phones, right? And they had a billion devices in the market, and I remember these conversations, and when they died almost overnight. In the giant, not to use a bad word, but the joke in the API market was the giant sucking sound that Nokia heard, where all the developers were running from Symbian operating system to Android and iOS. And so what they just didn't understand, they thought that their presence in the market with customers would outweigh this next motion. And if you look at, for example, Microsoft. Microsoft should own Android, right? That's what they do. I mean, you have that was what the Windows mechanism was they should have the operating system for everything else on mobile, but they completely missed that train and left the door open for Google. And you see these massive disruption events. They happen very rapidly. And certainly with the coming distributed computing coming online, and the nature of microservices and sort of the agile abilities of these companies with vast funds at their disposal begs for disruption. Yeah,
absolutely. And so I think the one of the things that's driving this change is, of course, expectations amongst users, who owns data, the new privacy regulations that are coming along. But ultimately, there is an opportunity associated with that. And so really what this kind of come down to in other industries is this notion of openness, because openness allows you to do new things that you haven't necessarily thought of yourself. And so these platforms, these standards, these regulations are starting to lead us toward a new open environment that will allow us to create new users, new partners, new products, and ultimately new sources of revenue. And it's reach then that allows us to get there as an industry. So even though some will say PSD2 is not necessarily a shining light of how we should go about changing an industry, it's ultimately forcing us in the right direction. Of course, the regulation is really just the first step, and this openness is one thing, but fragmentation is a problem, and that's been one of the challenges that other industries have had to solve for as well. A lack of standardization across products and services in any arena causes a huge amount of friction for developers, for ISVs, fintechs in this case, that are really trying to build something new and interesting, but can't possibly support all of the differences, the nuance from one provider to another. And any friction at all, no matter how small, ultimately limits the potential of this openness that we're after. So getting towards better standardization, I think, is really important. We've seen this happening amongst the European market. The Berlin Group, STET in France primarily, and Open Banking for the top 9 in the UK, each representing a path forward. But so this means at a minimum, Europe will have 3 flavors of PSD2 implementation. But even then, there tends to be some peripheral implementations around the edge that deviate slightly from even these standards and guidelines. So ultimately, all of this market is going to be subject to the friction created by that fragmentation, and that will ultimately stymie growth. Rich, we've talked about standards in the past. Is standards a good thing or a bad thing for our industry?
Oh, sure. It's it's a good thing. It's a great thing. You have to have it. I mean, without standards and common protocols and the means by which people can connect, it's impossible to expand the market where it has to go. So, you could even look all the way back to, why did we start the API, the quote unquote, what we understand today to be the API business. It was all about REST and JSON, right? In order to enable mobile. I can tell you, nobody even got involved with API management until the iPhone came out, until there were mobile applications, native mobile applications to be built. And that required everyone accepting that there were some common standards and common protocols. And that's evolving as we go because it's getting better and people are understanding maybe there's limitations with REST and those type of things. But without standards, without agreement in the industry on how you're going to connect data and flow services, you're effectively choosing death for an industry. You have to create standards. And that's every industry has that, right? And financial services, it really can't be any different.
Yeah, no, I agree entirely. I think we often wonder at the effectiveness of the standards organizations that get in the middle, but this lingua franca that we get from it really, really helps. And it's true in really the broader application ecosystem, even representing simple things like addresses or contact details or invoices. All of those areas will benefit from a greater adoption of a common language. And so, I think we need further investment and certainly much greater adoption of standards across the board.
And I think it's an interesting topic. Years and years ago, I remember having a conversation with a very large, one of the largest retail banks out there. I won't name it. And they had just made a very large acquisition of another bank. And I remember the conversation with their CTO group was such that there was so much legacy inside the system. There was so much speed of acquisition for the bank itself there was no way for them to normalize what you just said, like even just the basic data points. Is the account information consistent and standardized within the two different banks, and now you add more into that system. So we see that a lot in one of the easiest use cases for the API space is actually just enabling any company, banks especially, that are by nature have old legacy systems, but they're also acquiring things that have modern systems. The only way you're going to get where you have to get is to build all of your internal systems in a way that you can externalize them, right? It's the age-old Jeff Bezos, Amazon on sort of religion, right? Which was do not build anything in a box. Everything has to be, even if you don't plan to externalize it, you've got to build your business on a standard and on a programmatic standard that allows the business to be built and specifically be agile and pivot quickly.
Yeah, no, that's a really good point. Absolutely. So if openness equals reach and standards ultimately give us scale, that feels like a done deal. But actually, we've got to understand that there is a broader ecosystem, and so enabling an ecosystem across a global market of banking, across a growing and highly differentiated set of new fintech services. There's a bunch of opportunity that exists here, and how we can work together as an industry to bring these various standards and new services together is really where the opportunity lies. So standardization, I hope, is really just going to be the tip of the iceberg. And that leads us quite nicely then into the next section of our webinar today. I really wanted to set the scene up front and talk about the market dynamics that are taking us in this direction. But we also wanted to look at some of the really key things that banks are actually trying to achieve, that other financial institutions are trying to achieve, and the opportunity that exists collectively from building an ecosystem of partners in the space. We've tried to summarize as much of that as possible in a report that we authored or commissioned in the UK and the European market, primarily the State of Open Banking in 2019. So please feel free to hit this link and go download that report. We will be sending and sharing a copy of it after the webinar. So take a few minutes and read it. Don't read it right now. We've got more content for you. I think with that in mind, what we did was survey a number of banks and financial institutions just to get an understanding of their perspective. What were the things they were trying to achieve? Where did their priorities lie with regard APIs, with regard standardization, with regard partnering in the fintech ecosystem? And ultimately, the broad strokes here, I think, are very indicative of the sort of the sea change we're seeing, right? 9 out of 10 organizations we talk to in the financial services space stated quite clearly that they have an API strategy. That 8 out of 10 of those companies agree that API integration is critical within their open banking strategy specifically. So there's definitely a willingness, an eagerness even showing up in the data. I think, Rich, you've got some good examples here of exactly what sorts of things are perhaps driving the market.
Well, sure. Look, I mean, I think it's a broader conversation in that, at a high level, let's look at it this way, right? What does an API fundamentally represent? An API represents an unbundling of your application, right, at the intelligence layer. It's no different than unbundling your business itself. So when you look at the nature of, I would say that PSD2, so we're talking about PSD2. PSD2 effectively represents open data, right? I wouldn't call it, it's not really driving banking as a service. It's at least, but it's moving the industry forward in that regard. But when you look at Europe and UK, it's very different than the US, it's very different than Asia, right? And you touched on that earlier, but some of those data points are compelling. So a couple of things that are going on that we see. One is that, obviously the venture capital investment in the fintech space and financial services space has doubled year over year, over $36 billion. but it's on fewer investments. And so what does that tell you? What it tells you is that there's going to be a consolidation coming, right? Just like every industry, we've been through these cycles before, where you've had a lot of capital across the board globally in different areas. But now what's happening is winners have to be chosen, right? So a lot of this is going to get into, do you need, X hundred payment API companies? No. Do people are going to have to find ways to exist? There's going to be consolidation, some through partnership or acquisition, and that's pretty normal. 70% year-over-year growth in open banking platforms over the last year. Certainly the largest API expansion space that we see out there in terms of people reporting. Obviously, payments. Payments is the number one API that everyone is spending a lot of time on, a lot of focus on. But we're seeing a lot of growth in identity, KYC, AML. That's getting a lot of movement. Same thing for account information and account data, right? There's a lot of sort of holes in the bottom end. But I think a couple things I'll just touch on the regional split, and I'll come back to the slide. Europe is and has been ahead, right? So even though it's not perfect like anything in life, it's got its challenges. But even already, the data I've got shows that in the last 12 months, from June of 2018 to June of 2019, the open banking in the UK has grown in the number of API calls, successful monthly calls, round trip, from 2 million to 67 million. That's a pretty significant growth trajectory that we've seen, Ross, historically in the API space. That kind of tells you something, right? So it's working. Already working. So even though everyone is behind, clearly what's happening is that there's an uptick. There's an evolution happening in terms of people being able to access data and services of a bank and actually create value on the other end of it. And certainly the Open Banking Implementation Entity estimates that UK customers and businesses will see $22 billion of additional incremental value annually because of the increased level of service and competition. Now, where that takes us, going downstream from that, is looking at Asia, right? You talked about Asia, and they're starting to get into some compliance things, but the reality is most of that market growth is massive, but it's being driven by, I think, two primary things. One is the Asian markets, certainly Hong Kong, Singapore, but you look at Australia and Japan, and then the Southeast Asian markets, Vietnam especially, they're seeing massive growth in this space. They're seeing massive uptick in sort of API-led digital fintech transformations of banking services. But what's driving them is commercial. It's much more than compliance, right? There's understand what the PSDT represents in Europe, which is the beginning of a broader competitive environment for financial services in every part of your life, right? On the business side and consumer side. So Asia's I would call it a fast follower in that market, but man, they are moving ahead pretty rapidly because just in terms of the digital native and mobile payment market size there is enormous, right? So you look at people that they don't have the legacy banking issues. Certainly look at Southeast Asia. So you don't have the physical branch constraints and sort of the way they think about banking, the way they think about financial services and payments and things like that is mobile friendly from day one. And that requires APIs. That requires a different way to have the infrastructure feed it. And so the growth is enormous. Vietnam is growing year over year 24% in terms of the growth in mobile payments and things like that. So it's the U.S. is unfortunately lagging behind, and we can talk about that more. But the U.S. is not there, but for whatever reasons, both from a compliance perspective and also from just an evolution of new API products from the banks themselves, they're moving, but they're not moving nearly at the same speed.
Yeah, no, I think that's true. Obviously, here in the U.S. market, right, the Fed has far more limited power to set a mandate, and the market dynamics here are quite different too, right? There's obviously the large top 9 or 10 banks, but then a very, very large number of tier 2 and 3 banks that serve local markets, and so there's a high degree of fragmentation, and
Sure.
so that poses challenges as well. But I think ultimately, as you say, right, there's an opportunity, and if we're seeing that shine through in areas in Southeast Asia, then the U.S. market will react to that as well.
Yeah, and that's a good point. I think there's like anything in life, right? There's opportunity and there's survivability, right? It's a little bit of both. So, I think in a world where what does it mean to be a bank is the same question as what does it mean to be a hotel, right? Look at Airbnb. What does it mean to be a transportation service like Uber, et cetera? Everyone needs to look at their business and visit what it fundamentally means to be in the business they're in. So a lot of the large financial services and financial institutions I've talked to over the years, they have always had a tendency to ask me, hey, for example, what is competitor 1, 2, and 3? Like if, MasterCard and Visa, et cetera, looking at each other rather than saying, so a lot of the conversation I've had with them over the years revolved around saying, well, it's not about what your competitor 1 is doing. It's about the competitors you're not seeing, right? So who has the most, what are the 14 VC-backed companies just doing mobile fraud APIs, for example? Mm-hmm. What are those particular things? Because you now have to compete at the function level, not in aggregate. And that's really important. That's what the telcos had to deal with, was there's a certain commoditization of what the network really means. And they had to rapidly find a way to be willing to have some parts of their business commoditized, for example, like location or maybe it's SMS or mobile wallets, things like that, versus finding ways they can shine and add value, for example, authenticating the telco with a bank. That generates a lot of value in both parties. So there are areas to get into, but none of that can happen without building the APIs ground up, enabling that standardization, and then employing a sort of a partnership mechanism that allows you to rapidly build and pivot around the service. In other words, the API shouldn't be it is, but it can optimize your current stuff, your stack, but really it allows you an opportunity to revisit what it means to be a bank. For example, what are you doing? Who are your users? Where are they? Are they digital natives? Are they not? And all of that. Yeah. So it's a longer conversation, but it's topical.
Yeah, for sure. So in order maybe just to, as we dig into this a little bit, we obviously asked as part of our report what benefits people would perceive. I think it's useful for us to dig into some of the use cases here and talk a little bit about, where, especially with regard commercial banking, the B2B angle, what the world of open banking or openness in general will actually allow us to achieve. And the first area is, of course, corporate payments. I think, here in the US, again, the market is somewhat unique. There's a push towards faster or real-time payments. Adoption is still pretty low. But I think part of that problem is that ultimately, for new payment rails to be useful, they have to be tightly integrated with corporate systems. You have to have a direct link into accounting, ERP, and TMS systems in order to really leverage the benefits of new payments infrastructure. And hopefully that's one of the things then that this sort of change in market dynamics will affect. We'll see that ERP organizations will have an ability to build more capabilities into their applications directly, and that corporates will know that those solutions exist. Again, I talked at the beginning about this perhaps being partly a people problem and partly a technology problem. And if we think about how many receivables departments operate today, dealing with paper checks stapled to an invoice, there's just old processes that exist here that need to be overcome. And so whilst the technology is starting to exist in order to get there, we've got to educate the entire market about that. Specifically here, right, I thought this was really an interesting tidbit of information. This is from the Capgemini World Payments Report of this year. I'm just borrowing a little bit of content from them. The head of commercial banking at Bank of the West, here in the US, stated that API strategy and integration of fintech platforms in middle and back office operations are ultimately the biggest value driver for corporate payments. In other words, we need to focus on bringing the entire ecosystem together, leveraging core banking services, payment capabilities, and the rest of the application ecosystem in order to build something that's truly useful.
Yeah, and I'll add on that, Ross. I think that a couple things that I've found in sort of a lot of my conversations with people over the last little bit is twofold. One is I see there's a lot of evolution and a lot of innovation, for example, in the payment side of the house. However, I've noticed a sort of let's call it a nasty habit of sort of handoff. In other words, the API is there, the fintech goes to a certain point, but then it's really up to the merchant, for example, to integrate to the ERP. And so if you have a treasury management system that you've had legacy, for example, how are you going to optimize that? How are you going to modernize that to handle all these new data points and real-time cash transactions and payments and multi-bank sweeping, et cetera, right? Currency APIs. So the reality is that the systems in place today are going to need to be able to be integrated to and then evolve up around sort of the velocity. Because I think what APIs fundamentally represent to me are velocity. It's velocity of services, velocity of data, velocity of payments. And the faster things move, the more value is created, it's economics. But at the same time, you've got to have a system in place prepared to manage that kind of velocity, which is less simple.
Yeah. No, absolutely, and that does speak to like the overall or overarching transformation that we're seeing, not just in banking. One of the other use cases here, and Rich, you've touched on this a little bit already, right? Is this notion of end-to-end cash management. So looking at some of the standardization here, being able to aggregate account information across multiple environments is really interesting, but being able to provide a real-time perspective into cash management, forecasting, aggregation, supply chain financing, and all of your other sort of working capital requirements, moving toward a sort of real-time decision-making process in treasury departments, I think is really important. Being able to predict rather than react to certain liquidity situations, I think is also really important. And so again, this is an area where APIs and integration will actually help us transform our businesses, not just technologically, but all of the things that we do day to day can be improved. Ultimately, CFOs and treasurers are being asked to do more with less, to forecast further into the future, make sure that they're not guessing about their cash management positions, and excuse me. And this is the sort of data that will be afforded to us in a world of open banking.
Yeah, look, I think it's right on the money, and I think there's one of the things I saw in sort of the API management side of the house over the years was there's only so much value that can be created by just building an API and sending it into the ecosystem or into the ether. The reality is that the next level, the next step for this space is the composition, right? You've got to be able to understand your services and your data, for example, in my supply chain, in context of third-party APIs and services. Right. So once I have an API, now I've got to find a way to how do I orchestrate and compose that with these other data services? That's one. Two, just doing one-off partnerships, like one-to-one, is, in my opinion, is highly limited. It's also it's not ideal because what ends up happening is you're fully dependent on, let's say, one particular partner's service or API. How are they versioned? How are they thinking about their business going downstream versus, let's say, having multiple partners on the same service level, right? So being able to compose the point, so currency, like let's say currency exchange or procure to pay, wherever those components are, what is feeding that system, that actual process, Is that data flowing in and out of your CRM appropriately? Is it flowing into your supply chain? Are you using do you have IoT wrapped in the back end of your production environment, for example, depending on your industry? The concept of payment, the concept of the cash flow, the concept of historical and forward state is only as good as the data that feeds it, right? And so you really want to have a concept of integrating your systems to as many data points as you can get them pragmatically, right? So you're going to be able to, you want to integrate your systems together in a lightweight way, so you can go from let's say partner A to partner B, or move between the systems as they come online, because the world moves too fast these days, right? By the time you get something up and running, in a year from now, there'll be 3 other people doing that, solving that problem in a different way. And you don't want to chase everything, but you want to be able to, you want to have your systems enabled to support that, is the best way to put it.
Yeah, absolutely. The final use case that I had highlighted, and it kind of builds upon the last, is this notion of creating a unified view across multiple banking relationships. On average, corporates have somewhere around 10 separate banking relationships. Maybe this is in differing areas of their business, or different geographies of their business. But again, creating a seamless experience across all of those relationships, I think, can be really transformative in how banks interact with these corporate customers, and also the bank that can provide that singular view also allows them to capture more of that corporate's attention, and hopefully that leads to them capturing more of that corporate's business. The idea of getting a deeper understanding of how one of your corporate customers is perhaps doing business with another bank could be possible through the existence of open banking, and that's certainly going to be true of some of the regulation that we see in Europe and in Australia in particular.
Yeah, look, and I think those are great points, and I think it's square in the sweet spot of I think explicit value for corporates, that they get a lot of value on the other end of that, and it again begs the question of who's doing what for whom, right? So if a challenger bank in Europe comes to the U.S., gets a charter or license to operate, I mean, what does it mean to be a regional bank here in the United States, for example? How do you compete for your customers, not just your consumers, but your business customers? And are you able to build the services on the other end of your bank to grow the business out, right? And so finding a way to let's say differentiate in a world of rapidly built sort of multiple systems all doing similar things in an API front end, as it were. That's something that requires thought and strategy, and it's not like everything. It's not just a technology solution. You've got to think about the problems that your corporates have, for example, in terms of managing their multiple bank relationships, and what can you do to make that take that pain away. And again, it typically revolves around the API.
Yeah, and first movers have an opportunity here for sure.
For sure.
So, that really wraps up the main section of the content. Ultimately, the advice from today is we need to navigate past this impending iceberg, right? And look at the opportunity that exists in the world of open banking. I'm going to now make time for a handful of questions. So I have one or two. Actually, the first one, Rich, might be good to help us with. And just as a reminder, go into the GoToWebinar panel if you've got questions, and we'll pick them up from there. But somebody from our audience is asking, I'm interested in the rollout of open banking. How has it gone in Europe and the UK? The impact it's having on players. And if you have a sense of who's moving next.
Yeah, those are great. That's a great question. Look, I mean, we talked about this a little bit earlier, but I think again, what we've seen is there's still a ways to go, and everyone's got an 18-month, quote unquote delayed deadline for PSD2 in Europe. At the same time, they have to show movement down that path, and we're already seeing upticks. We're already seeing success, even though a lot of people, like you said, have not gotten there yet. But it's caused the market to already gain clear benefit on the other end of that, and that's great. As I talked about Asia, I think generally starting to see some compliance there, but the reality is it's just commercial growth is driving it, competitive opportunity is driving it. And digital native, sort of, especially on mobile payments, is really just driving that part of the market. And the U.S., look, I mean, I think, as you said, it's harder to do that regulation in the U.S., but we've seen exceptions to that. I mean, in Europe, you have GDPR. In California, we're going to have CCA. So the reality is you will have sometimes state-by-state pushes toward openness and combined with security. Because let's not forget, part of this in Europe, and certainly in when you think about banking, is screen scraping. I mean, look, the reality is an API is always going to be more secure, right? If you're doing it right, you're using multi-factor authentication and best practice standards than a screen scrape, both for just the consumer experience. And we've seen that in the U.S. You saw it with Capital One and Plaid. Look, the reality is that we're better off in any industry using APIs than we are just relying on traditional screen scraping methodologies, pulling your account data and passwords over here and just using it to log in. That's not a best practice. So whether regulatory environment forces that or whether people do it organically, it's just as needed.
That I think that's a really good point, that, ultimately the market's going to move and do something regardless. And if that means they have to sort of work around you, doing things like screen scraping, the market will. And that brings a whole bunch of other problems. It's far better to get out ahead of it and enable customer experiences and new digital journeys the way you want your bank to be represented, the way you want your services to be represented, putting your best foot forward rather than have somebody else do it for you.
Yeah, and look, this does wrap into security quite a bit. I mean, really, when you think about it, that's one of the big drivers here, is just creating a secure environment for people to share all their financial data and assets across all these new applications, really, right? So in a world where, if the government's not going to stand up for the consumer, honestly, it is incumbent on the financial institutions to trigger that. And I think that Capital One, the use case I used, I think it's a great example. And there was some blowback on that. But look, they're a highly progressive bank. They're highly progressive in terms of the API and the way they develop products. And they know what they're doing. And I think in that regard, making sure that they're responsible for the security and authenticity of their users' data, right? They're on the hook for it. And so just doing things in a way that makes sense for them. But that's a good example of one bank doing it its way that might have caused some disruption, like in terms of your account going into Mint or whatever what Plaid was using for that. But in that regard, I think it's in Europe and Asia, you're not going to see the same thing because you're going to have more common standards. And I think I'd like to see the U.S. progress that way. Yeah,
I agree. And there are some other questions here about standards, and I think we've covered a lot of that already. In summary of that, it feels to me that we'll see an ever-increasing number of standards here, probably some specific things around use cases, right? You mentioned procure to pay, that sort of space around, extending e-invoicing, the ISO 20022 standard, et cetera, I think will help us craft a more structured ecosystem of standards, actually, that all work together. That's it then for the questions. I just want to remind everybody that you can go ahead and download the State of Open Banking report. Hit that link there on the webinar screen right now. We will be forwarding on a copy if you don't download it immediately. As another reminder, if there's any other questions or follow-up that you'd like, feel free to reach out to us on Twitter or LinkedIn. We'd love to continue the conversation. With that, I think all that's left for me is to thank everybody, and Richard in particular. I really appreciate you taking some time out today.
Sure. Happy. Now I need to go back to the candy jar.
Yes, indeed. Yes, and happy Halloween, everybody. Stay safe out there, and I look forward to speaking to you all soon on the next Cloud Elements webinar. Thanks for your time, and goodbye.
Thanks, Russ.